Two-part video. We're going to be talking about crypto.com, family, and Tectonic. Make sure that you like, subscribe, hit that notification bell, and keep your favorite crypto and door-to-door entrepreneur inside the algorithms. So, a lot of people have been saying crypto.com is too selfish. We're going to be talking about that, family. I'd love to know how y'all feel about the crypto.com fees in the comments. And, yeah, are you bearish or bullish on the fees? So let's get into it. Now, not a lot of news going on in the crypto space. We're seeing a lot of volatility. Taking a look here at 𝐭, it is sitting at 7 cents, market cap 1.9 billion. And you can see here the circulating supply, 83% of the max supply. So we love to see that. The volume, though, family, is down 16%. But again, because of the market trying to price in the Fed news, we're seeing a lot of volatility in the market. But I've been seeing a lot of people complaining about, actually for months, I've been seeing a lot of people complaining here about the Fed fees and the fact that they're too expensive and stuff like that. But you got to understand, crypto.com is a business, okay? So let's look at it from a business standpoint, because one thing we got to understand, family, is we want the business to be sustainable. If you swing over here to cryptofees.com, you can see there are tons of crypto projects, but which are the ones people actually paying to use? People are actually paying to use. And the thing about it is, family, understanding 𝐭 and its business model. You feel me? It's not a crypto project that's based on speculation. They actually have a real system. And the fact that they earn liquidity through fees should give you even more confidence that this project is going to be around for years to come. Of course, they got high fees because of the marketing, family. Let's be real. You ask for the marketing. You want the Staples Center. You want the World Cup. They got to pay off these guys for the marketing. So I have even though I'm not a fan of the fees, I understand where Chris is coming from. If you want the market and if you want your business to stand out and more people aware, well, you got to pay your way, family. And that's the biggest thing I think a lot of people look past. They focus on, oh, well, Millie, when I'm trying to take profits, there's this fees here, this fees here. And that's why it's so important that for you to do your business on multiple exchanges, multiple decks. I personally, family, like to build up multiple wallets. Okay, I'll get to a point where it's like, okay, I got enough liquidity in projects in my trust wallet. Let's work it on building my MetaMask. Or, man, I'm stocked up here on crypto.com. Let's work on building up my KuCoin account or my Binance account. Just being diverse doesn't stop at crypto projects. You can also be diverse on how you build your portfolio. So, again, these crypto fees could be a positive or negative. I see my guy Siobhan Johnson. Shout out to Siobhan Johnson, and shout out to the Tectonic ambassador for the shout out. Appreciate y'all. I just was tuning in, listening to that Tectonic Tuesday. I'm gonna try to stop by one. You feel me? But definitely appreciate y'all and what y'all bringing to the tonic community here. But you can see Siobhan here. It says, I'm with you, crypto.com, but this is not showing appreciation for sticking by you and investing with you. This is taking advantage of my loyalty. And you can see here, Bitcoin, crypto.com is saying, hey, win 1 Bitcoin by growing your portfolio. So if you put up $100 and you consistently make trades on crypto.com, it increases your chances here of winning a free Bitcoin. And how much is a Bitcoin? Bitcoin is like what? $21,000. I think submitting $100. We use crypto.com all the time just to put yourself in a position to eventually win 1 Bitcoin. Siobhan, you my guy, but I don't think that this is actually a bad marketing ploy, because at the end of the day, 1 Bitcoin could potentially change somebody's life, especially if we see this insane bull run where Bitcoin literally 10x or 20x is to 200,000. We're talking about that 20 grand turning into 200,000. So I'm going to personally, work to, deploy $100. But I can understand where Siobhan is coming from a client or customer point of view. It's like, well, crypto.com, man, you've been taxing us for months with these fees. You get what I'm saying? And now you want people to pay for an opportunity to win a free Bitcoin. But this is going to bring more people to use the product. And that's what we want with these exchanges. As exchanges work to replace banks, we want more people to use the project. So sometimes I think we undervalue some of the marketing plays that crypto.com puts out there. But again, family, understanding how businesses work and the fact that these guys are a liquid business, it makes me feel a little bit more comfortable with my investment. I don't want to invest into a broke exchange or exchange that doesn't have any liquidity. I want to invest. And in fact, to be honest with you, I love to invest in projects that actually earn liquidity through fees. I mean, cryptofees.info is a great website where you can go through these projects and see which the ones that, again, people are actually paying to use. It's kind of like when you're in sales. Would you rather have to go find your clients, or you want your clients to come to you? So I can understand from both standpoints, as being a client and also being a small business owner. And you can see the Chronos chain again, earning liquidity for fees. And then we'll just have to see how the ecosystem builds up. And Crow has a full ecosystem here, and they even have a NFT marketplace. And yes, I remember where you could put up NFTs and it was free. But again, no other place was doing that. I mean, there might be NFT marketplaces that's spawning out of thin air, minting, and they might be free. But none of the big NFT marketplaces were allowing that. I think with OpenSea, you had to have a certain amount of Ethereum to even list your NFT. So here, $3. You know what I'm saying? Try using Ethereum or Ethereum chain. That gets expensive. And guess what, family? People complain about Ethereum, but people still use it because there is a utility and use case. So enough of that. I just want to cover that real quick. I want the family, the Crow fam, to understand what you're investing in and understanding the pros and the cons of these projects, accumulating liquidity here through fees. All right. So back to Tectonic here. So I've been seeing a lot of people voicing their opinion on the Tectonic votes. I actually seen a guy say that Tectonic forced him to put his earnings that I guess he earned over time into a vote, and it brought the conversation is this what the SEC is working to protect clients and customers for? Because at the end of the day, you should have a choice if you want to choose to stake or vote. Now, I don't know the full information of that, but I'd love for the Tectonicians to let me know in the comments how y'all feel about the votes. Is it something where you feel like you're pressured, or is it something where it's like, okay, I understand what I'm investing in, and I look at this as a 4-year investment? And understand. And another thing, family, investing is 4 to 7 years. Just look up the definition. Anything less than 4 to 7 years is a gamble, and you're better. It's similar to just walking off into a casino. So again, understanding that these 4-year vaults do accumulate over time, and it can award you a passive income. Just imagine you having Tectonic here in a 4-year vault, and we see Bitcoin run to something like 100,000, 200,000. Where do you think that liquidity, those coins, will be worth in your 4-year vault? But also understanding the risk that you take. When you sign up for something like staking, there is a risk. You can't blame anybody else but yourself. You know what I mean? So if you're going to stake, you got to understand, okay, I don't have this money anymore. Anytime I do any type of staking, I chalk it to the game. Hey, I don't have this money anymore. So I release that pressure on my mind to thinking, oh, I always got to come back to it. I just act like it doesn't exist anymore. But that's me, not financial advice, family. But again, I don't know the ins and outs about how the votes work. I haven't really use the product just yet. I've been looking to use the product. I just do so many things inside the crypto space, so I really haven't had time to really lock in it. But I'd love to know you guys comments on the project and how y'all feel about the vote process. All right, and taking a look here at Tectonic, it is sitting at 60189, up 5% on the day. We're seeing an increase on the market cap, the fully diluted market cap, and value. Now, something came to my table here, family, because again, Tectonic was holding strong at 602, and then we seen a little pullback as we got that volatility from the CPI data reading, etc., etc. But something came across my table. Somebody asked me, well, Millie, why is the Tectonic TVL decreasing over time? As we get more people joining the project, more holders, shouldn't the TVL be increasing. So I did a little bit of research to find out, family, what's the pros and cons of TVL decreasing in the crypto space, and we're about to cover that right here. Also, make sure you like, subscribe if you're getting some value, family, and go check out the links in the description. Join the Patreon, man, if you're interested in super DJ plays. Like I said, they're not buy or sell alerts. It's just something I like to do. Watch lists, put out some good narratives, and keep everybody in the game, skin in the game. So let's go over the cons of TVL here. Okay, so total value locked, if you didn't know. So the cons of a TVL decreasing. Okay, first and foremost, market conditions. The TVL or project may be affected by market conditions. If the crypto market as a whole is experiencing a bearish trend, investors may pull out their funds from the project, resulting in a drop in TVL. I don't think that's the case here. All right, so let's go over another one. Project related issues. The TVL of a project may also drop due to issues with the project itself. This could include issues with the smart contract, security breaches, or concerns about the project's leadership or development team. Again, don't think that's the issue here, but remember, we do have to go over the pros, so stick to the video. Competition. The TVL of a project may drop if there is an increased competition from projects offering similar services or products. If users see a better alternative, they may withdraw their funds from the project, resulting in a drop of TVL. Again, I just don't see this happening in the crypto space with Tectonic, because I'm not seeing a lot of negativity out there. As far as sentiment, I'm seeing more positive sentiment than negative. 4, this is an important one. Changes in the tokenomics. The TVL of a project may also be affected by changes in the tokenomics. For example, if the project decides to increase the supply of tokens, it could lead to dilution and drop in the token's value, which could lead to a drop in TVL. And swinging over here to the circulating supply, I know Double O was talking about this in the Tectonic Tuesday space. I haven't had an opportunity, family, yet to actually keep my eye here on the circulating supply, but I'm now going to keep my eye on the circulating supply, because at the end of the day, it is 22% of the max supply, which means we may see a little bit dilution and inflation in the project. And hopefully Tectonic is working to solve these issues here with the tokenomics, because I love to invest into projects that offer price appreciation and are deflationary over time. And again, if you are part of the Tectonic community or a developer that's close in the project, don't be afraid to comment. Let me know, correct me if I'm wrong, or just leave your opinion. I'd love to know you guys' opinions in the comments. Last but not least, decreased demand. The TVL of a project may drop due to the decrease in demand for the project's products or services. This could be cause of lack of interest from users, changes in users' behavior, or projects in the broader market that reduce demand for the project. Now, this could possibly be the case because in the bull run, people use these lending projects a lot more than in a bear crypto cycle. Just look at all the lending projects. I know I talked about one the other day. I think it was called like 𝐥𝐸𝐸x, where they do lend, they do some type of lending and borrowing, and nobody's actually using the protocol, and that's why we're seeing most of these lending protocols at the floor levels. But don't get it twisted, family. When the bull cycle comes back around and people start using leverage and people start using lending and people start lending their crypto upon crypto and look to stake and earn this passive income, you will see a increase in the TVL. But we do have to understand this is a crypto winter, and it's going to be interesting based on what the Tectonic developers plan on doing with some of this extra liquidity as far as rewards and developments of the ecosystem. So keep that in mind. Let's get into pros. So number 1, lower volatility. A drop in TVL could result in lower volatility for the project's token. When the TVL is high, there could be significant fluctuations in the token's price due to changes in the amount of assets locked in the project. A lower TVL could lead to more stable token prices, which could be beneficial for investors and traders. So this is a good thing, because I noticed in the Tectonic Tuesday, space that they had as far as Twitter, I noticed a lot of people were locked in for a 4 to 7 year investment. And that's what you want to see from the community. You want to see the community, most of the community, at least 60 to 70% of the community locked in for long-term investing. Now, you can easily make a good bag swing trading token, Tectonic. Don't get me wrong. I've talked about it plenty of times, but again, when I go to these spaces and I listen closely to some of the people in the community, from what I was getting, most people who are investing in Tectonic are looking at it as a 4-year investment. 2, more attractive token prices. A drop in TVL could also lead to more attractive token prices for investors. If the token's price drops along with the TVL, it could become more affordable for investors to buy in, which could attract more interest in the project. And that's what we want to see. We want to see the holders going up. So we asked ourselves that question, family. Well, is the holders rising over time? And I guess that's something we can actually check out here. If we swing over here to the contract, we want to see if not the Telegram, they got in contract, yo. We want to see here if the token addresses are rising over time. Now, what we're seeing here is the token address actually decreasing. So I'm definitely going to keep my eye on that. So that kind of like crosses that out as far as a pro. So we know that's not what's going on. We know this is not what's going on, because again, you want to see the holders actually increasing as the TVL or price drops, and we're just not seeing that. So again, that just goes back to the marketing. We do need a little bit of more marketing from the Tectonic crypto project, but it's good to see them putting together ambassadors and getting into the marketing. A few more Twitter posts will work, but again, we are seeing a little bit of FUD in the crypto space when it comes to staking. So I want you to keep that in mind. Maybe we lost a lot of not a lot, but a little bit of holders within the last month because of the news here on staking. So definitely keep that in mind, family. 3 here, opportunity for project improvements. A drop in TVL could give the project team an opportunity to address any issues that may have caused the drop. For example, they could address security concerns or make improvements in the project's interface to make it more user friendly. I trust and believe that the Tectonic development team are working on the security and comfortability with the project, especially when you do staking and lending, man. You know, you're holding other people's money, OPM, so you want to make them feel as comfortable as possible. Opportunities for new partnerships. Now, this is a good one, and didn't think that this was actually a pro to TVL dropping, but it says a drop in TVL could make the project more attractive to potential partners who may have been hesitant to the partner with the project when the TVL was high. A lower TVL could make it easier for projects to negotiate more favorable terms with potential partners. And last but not, which is cool, because we want to see Tectonic gain more partnerships. Hell, we want to see Tectonic eventually gain more listings. So maybe this drop in TVL could be more attractive for some of these exchanges looking to pick up their Tectonic bags for a low price. And last but not least, better alignment with the project goals. A drop in TVL could help the project team to focus on the project's long-term goals and priorities. When TVL is high, they can be pressured to maintain or increase TVL, which could lead to short-term decision making. A drop in TVL could allow the team to refocus on the project's missions and long-term goals. And I think that this is the most realistic situation that we're going through right now with the drop in TVL. I think that the Tectonic development team, I think they're right there, they're throwing things at the wall and they want to see what sticks, you know, from the changes to the APYs, the vaults and stuff. They want to see what sticks so they can make a better ecosystem here for the customers and clients. Better product, better utility, better use case. At least I'm hoping that, family. At least I'm hoping that. But y'all let me know what y'all think about what's going on with the drop in TVL. I'd love to know you guys' opinion. Again, we're getting a lot of mixed signals here inside the market, so I want you guys to just keep that in mind. I know every hour it seems like the market is pumping, and then the next hour it seems like the market is dumping. So just keep that in mind. As far as the crypto.com fees, understand how businesses are run, but also understand this. Unlike a lot of exchanges, crypto.com doesn't use leverage. Now, leverage might help exchanges, but it can also, in the crypto winter, hurt exchanges. So you're protected there. And as far as the Tectonic TVL, I'm going to personally bank on that these guys are working on increasing development within this project, looking to push out new developments for the Tectonic ecosystem. So I know this one was kind of long. I should have split it up into 2 different videos, but I didn't because Crow and Tectonic kind of like go hand in hand. A double team. Let me know what y'all think in the comments. If you got some value here, please like and subscribe and hit that notification bell and check out all the links in the description. It's your boy 𝐦𝐨𝐫𝐞 TV. Millie, I'm out.